Good day to one and all. This is Dr. Sivaram of iknowindustries.com. I was giving the spike trade call pre-ECB data release between 11 and 11:30 GMT. I was explaining to you at that time that they are expected to make a dip before that of the ECB press conference and then start gaining the levels. That is what expected based on the forecast. Then subsequently, we did the market reading and found that they are making a downward extended move in order to make an upward rise after that of the ECB press conference. And what has happened? When the no change interest rate decision was seen, there is not much of an activity in the market. But subsequently, when ECB president was talking, somehow they derived that he is hawkish or whatever it is, started gaining the levels in the case of euro from the of 0991 level to 1.1039. And then subsequently, after about 13:05 GMT onwards, they started making the slide. Why they should make the slide once the meeting is over? Do you think that they are hawkish and they were expecting euro to go up, and then subsequently in a matter of about 15 minutes they made that drop and come close to that of the low, but not breach the low and started gaining again? But if you look into the time, you can understand 13 to 13:30 GMT is a gap time before the start of the US session. So they just made the dip for the US session. It indicates that they wanted to gain the levels during the US session, because during the gap time, they make the false move. So once you look into that of the forecast, they are expected to make the swing and slide and then rise. And afterwards, during start of the US session, 13:30 GMT, but now it is 13:13 GMT. It is a gap time before the start of the US session. And during the US session, they are expected to make the swing and rise. So we need to understand how systematically they follow the timings. But these timings are not being explained to that of the traders. Instead, the traders are asked to follow the European time, the UK time, London time, or then New York time, etc., so that they have a different perception of the market when they view it from an angle, because they view the market with their local time frame. So automatically that will look different. But when you follow the GMT time frame and follow the times followed by the other players, then you really understand what they are trying to do. So when you have taken a buy position, you should close by 13 GMT and again rebuy near that of the low, and then it will start gaining the levels during the US session, because gap time they are making the false move on the downside. Now let us look into that of the trade calls what I have given and see what happens. In the case of euro, I was keeping a buy limit order 1.0950, and still they are not come to that particular level. But I was explaining to you that when they are making a dip around this level, you can take a buy and then they will gain the level 1.1030. I have given that, and they went up to 1.1039 and started coming down again. Again, it is a great buy opportunity now. During the US session, they will gain the level 1.0960. We can take a buy and they will gain the level, or 5.5 you can take. When they are making a small dip, you can keep 5 pips below the market, the buy order, and once they fill it, you can keep the hedge order immediately 30 pips or 40 pips away from that. And once the position start making profit, keep stop at entry, and then trail the hedge, trail the stop in a profit making position, trail the take profit order on the higher side, so that the market might hit either your trailing stop on the downside or trailing take profit order on the upside. So that way you can maximize the profit. And in the case of GBP, I was giving the recommendation that 1.2250 area around that you can take a buy, and they made another 25 pips downward move, or even 35 pips downward move to 1.2214. So if you have taken a 1.2250 buy, 1.2210, if you have kept the hedge order, they are not hedged, and they have started slowly gaining the level, and you will come across that they will slowly gain the level during the US session as a market surprise. And in the case of Australian dollar, they just come down and they went up a little bit and then come down, but not much of an activity in the case of Australian dollar. And when they dip, you can take a buy and they'll slowly gain the levels today and tomorrow. So the market will be showing upward move during that of the US session, and also tomorrow. If you look into that of the weekly forecast, what I have given it on Monday, and tomorrow morning during that of the Japanese session, I will review the forecast, what I have given it on Monday. At that time, I'll explain to you why they make such moves in a market. Then the case of yen, they went up to 103.86. I was recommending around 103.90 level, you can take a sell, but they went up to 103.86. When they push upward a little bit, or around 103.80 can take a sell, and slowly they will make the slide, and weaken they will make for the downward move in the case of USD yen, and that will act as a trigger for Euro and GBP to go up. So if you've got any question, you can ask me the questions. The question answer window, I'll be willing to answer those questions. Now, once the gap time is over by 13:30 GMT, you can just follow it straight away how they are slowly swing and gain the levels. And in a very systematic way, they will do it. But if you follow the time frame that they are using it, then you will be able to read their intentions very well. How systematically they are doing it and earning consistently from that of the traders. And the traders are looking into the market with a different perception, looking into the market, following the technicals and fundamentals, but the players make all sorts of moves. Now they are just made a downward stop and 1.0945 and then started gaining. So this is how they make the stop point. Stop point here, but only a false dip in the case of GBP. And as I explained that Euro, they have been gaining when GBP was holding in order to gain Euro, GBP cross the levels on the upside. And now you find that Euro has made the drop and GBP is holding and slowly gaining the level. So automatically Euro, GBP will make the downward move. So this is how they alternate the moves in the case of Euro as well as GBP in order to bring in the volatility in the case of Euro, GBP cross. So keep in mind that the players make the moves in the case of the majors to bring in the moves in the crosses. Any doubt, kindly ask me. I'll be glad to answer to those questions. Always understand the quick moves or false moves. When they quickly make a downward stop and during the gap time, understand that they are trying to hit the stops when big orders are not coming from that of the banks, because the banks' big orders will come once US opens by 9:30 local time, by 13:30 GMT. So before that, they will make all the stop-ins. Otherwise, what will happen when big orders of the banks come for the exporters and the importers, when they make a downward stop, and automatically their orders will be filled and they will take the lowest level sell. So they will not do that. They want that, they will only push the market on the downside and accumulate buy positions. So this is how they do it, and they will not do it during the early session or the late sessions. Only during the gap time or before the data release, when the volume is not there, they will make such stop-ins. Understand their cunningness. Then you will be able to really appreciate or perceive the market as great trading opportunities. Otherwise, you will look into the level and become bearish. You won't feel like buying. Once you stop cutting the new low for about 10 minutes, you can take a buy around that, or you can take around current level and keep the hedge order to limit the risk. Once it is hedged, you can watch whether the hedging is making profit. The hedging is not making profit for 10 to 30 minutes. You can simply close it with stop at entry or with 1 or 2 pips loss and keep another hedge order 15-20 pips below and watch the market to go up, and then start trailing the hedge order upward until you are able to keep stop at entry. See, this sort of trading strategy, if you follow systematically, then you will find that you need not be afraid of any data release or any of the rumors or any other sudden knee-jerk reactions happening in the market, because you will be always having the protective hedge order to limit the risk. If there are no questions, probably I'll just wind up the webinar. So you can just follow the market after 13:30 GMT during that of the US session, how they are making the moves in the market. Then you will be able to really understand how the forecast is really helping you to fine-tune your market reading. Then the hedging orders and things like that, the trading strategy will help you to limit the risk so that you can follow that forecast and use the risk limiting factor. Thereby, your market fear will be reduced. So you will not be worried whether the usable margin will suddenly erode or anything can happen suddenly. That sort of fear will not be there if you use the hedge order to limit the risk. They again cut the new low by pip during the gap time. Always the gap time moves are false moves, keep it in mind. They do it during the session, then it is a genuine intentional move on the downside. You just watch, then you'll be able to really understand that. So no question is coming forward. So I'm thankful to FX Trade for the facilities provided to present the webinar, and hope you traders have really understood how we need to read the intentions of the players and use the trading strategy to grab profit from the market rather than worrying and becoming surprised and also become tensed and under the influence of greed and panic. If we try to work, probably our longevity will be affected. So keep in mind that the market reading should be a very simple procedure so that you will be able to trade at ease. So I'll come back again on tomorrow, Friday, during the Asian session live market analysis webinar, which I'll give it by 5 GMT. Try to follow the market during the session, and if there is any question, tomorrow you can ask me during the Asian session live market analysis, what I'll be giving it as a review part for the weekend. Thank you one and all. Wish you all happy trading. See you tomorrow.